Hey, hello everyone. So this is Hulk from Hulk Option Services. Welcome to my YouTube channel. So today I'm going to discuss on how to go about selling iron condors around earnings. I'm sure you must be wondering what's the secret sauce behind selecting the perfect legs for iron condor. And I completely understand how confusing this process can be. Let's look at some questions that might arise in your mind. The first and most important question is the win rate or the probability of winning the strategy. Secondly, how far out of the money should I go from the current spot price to select the perfect legs? Should I even consider the standard deviation from the current spot price? Are there any important events associated with the stock before or after expiry? And I'm talking only about earnings. And finally, what should be my exit strategy? So, in my next slide, I am about to share a secret recipe that I personally use to handpick iron condors with a higher success rate. You just have to follow the process. Let's take a look at example of box. So today it's trading at $18.5. So the first step is to note the earnings date. It's 1st December 2020. The second step is try to go one standard deviation below and above the current stock price. So that would be $16 and $20 in our example. Step 3 would be targeting selling a delta of 30 both on the lower and the upper bound side. 20 would be ideally safer. Step 4 would be finding for historical implied move versus the actual earnings. Step 5 is to aim to get at least 30% of the spread. So in our case, the spread is $1 wide, and I would target at least 30 cents. Here you could see it's 55 cents, which is better, but the probability decreases. So if you go out, it's better. I will then choose the weekly or the monthly expiry for this current earnings date. Step 7 is simply to save the plan but do not execute it yet because you want to typically wait until the days of earnings to capture the IV due to pre run up, and that can easily increase the IV. Then, on the days of earnings, I will just adjust the deltas depending upon which way the stock moved and finally plan the exit. I would set my profit and loss target both to 50%. So please note that you don't have to force a trade. If the risk reward is really bad, I would recommend do not even think about getting into the trade. It never makes sense to lose $1,000 to make $100. So please look at the risk reward ratio. So for more in-depth understanding of iron condors, feel free to reach me or DM me out here on YouTube. Finally, let's summarize why would we sell an iron condors during earnings, and let's understand the key pros and cons of selling iron condors. First of all, I love taking advantage of elevated IVs around the earnings and then capture the IV crash post earnings. Also, this has got a pretty high win rate but a bad risk reward ratio. So please keep that in mind. Iron Condor is a risk defined strategy, so there is no unlimited loss. Finally, 50% profit is really likely, while 100% does happen, but it's still rare. I hope you enjoyed this educational video. For any questions, email me at hulkoptions@gmail.com or follow me on stock tweets. And yes, please like, comment, and subscribe so that I could create more such educational content. All right, signing off. Goodbye.